Hey flippers, how are you doing? It's Marcel here. Welcome everyone. Here I am with the weekend forecast video, and sorry for not uploading it yesterday, but I just recorded another weekend forecast video yesterday, and actually I forgot to record voice on it, so there was completely no sound on that video. And yesterday I didn't have time to record it once again, so that's why I'm creating it today. But anyways, here I am creating it. It will be posted before New York session open, so no worries. Okay, before we start this video, I have a question to you guys. That actually I'm looking for a new video recording software. Lately I've been using Zoom, simple Zoom to record videos. I'm using Zoom to record this video also, but I'm not really satisfied with the quality of the videos. If I'm moving the screen, it's lagging. For me, on my screen, it is not lagging, but in the recording, it will be laggy. You will see that it's jumping back and forth, and yeah, I'm not really satisfied with the quality. It can be much cleaner, much better, and I want to upgrade to something. If you can recommend any video recording software or screen recording software, I would really appreciate it. I'm not really into these program things and software things, so I don't know shit about these things. So yeah, if you can recommend me a video recording and maybe a cutting or editing program, I would appreciate it. But just some information that I'm dumb to these things, so I can't really use these complicated video recording and editing things. So just an easy program. I need an easy program, and I would appreciate if you can recommend something for me. But anyways, let's just start a breakdown on the EURUSD chart on the 4-hour time frame. So first of all, you know already what has happened here. We were expecting a reaction here on this demand area, and two outcomes, but two possible outcomes. First one, if the change of character to the upside longs. Second one is the break of it and the continuation all the way down to this demand region, because there's still a nice amount of liquidity resting above it. This was part of this huge liquidity trend line. Technically, new liquidity has been created right here. First, second, third touch of the liquidity trend line. If I just draw a nice line, you will be able to see that it's a really nice liquidity trend line built up for this demand still. And the thing that we are looking here is that price broke below this demand with a really nice flip action. Price is coming down, mitigating the region, coming up, couldn't create any reversal reaction. Instead of creating this reversal, it just flipped the zone right here and left the 4-hour supply behind. So last week, I wasn't looking for this 4-hour supply because price was far away from it. I was expecting a reaction on this 50-minute demand or this 50-minute demand right here. But it seems like price is coming up to mitigate this 4-hour zone. So the thing that we are going to do here is that we're going to switch them to the 50-minute time frame, because technically for this 4-hour zone, there will be 3 outcomes, right? So first one is the mitigation of the zone, 50-minute change of character, continuation to the downside. Second one is the break of it, 50-minute flip of it. And the third one is the price will react on some sort of demand somewhere around here in this region, continuation up to the supply. Then after this scenario, all of the first two one of the first 2 scenarios can play out, but it is possible to take longs after the supply still. So that's what we are looking for. All we have to do is to scale down to the 50-minute time frame. Take a look at the 50-minute chart. We can see that price left a real nice amount of liquidity below the supply region here, triple taps. So we can expect a nice whip into it and a nice reversal. And I will tell you something about the short scenario that we will look for. Sorry, demand. But before I talk about the short scenario, I will explain the long scenario. So price has a chance to come down to this demand, or even to this refinement down here that has been mitigated already. Technically, there's liquidity above it. So price has a chance to come down to this demand or to this demand down here, and create a confirmation entry here and create longs all the way up to supply, all the way up to sweep up this liquidity. So this is the long scenario that we are looking for. If price can come from any of these demand areas here, then we will be able to take longs. This is easy, right? We are looking for respawn. If it happens, we will execute longs. Here comes the tricky part. I mean, not tricky, but this is something different from what we do. Usually we are waiting for 4-hour for 15-minute reaction, 15-minute confirmation on 4-hour zones. But since the bearish pressure is insanely strong currently, price is flipping over valuable demands over and over again, returning to supply areas over and over again. Just look at this bearish pressure all the way down, leading all the way down to this demand, just creating this really nice bearish structure. So likely if price mitigates this demand, supply, likely we will continue all the way down to mitigate the 4-hour demand down here. And the reason is because here's this huge amount of liquidity. And if this liquid is getting swept into the supply, then we will have a really insanely huge reaction. I'm expecting this reaction. We can find a small amount of liquidity above this area, but technically, since we have more liquidity below the area, likely it will be enough to reverse price to the downside, so this won't be swept out necessarily. So, all right, the thing that I'm pointing out here is if you're in a good amount of profit in this month, and you have a high risk tolerance, and you're, I don't know how to say it, you're confidently believing in yourself and believing in the trend and believing in the order flow and believing in that you have nothing to lose currently because you are in a nice amount of profit in this month already, then I would recommend you to not to wait for a 15-minute change of character here, but for a 1-minute change of character. And if that 1-minute change of character happens there, it will be a risky trade. I admit it will be a risky trade, more riskier than waiting for a 15-minute change of character. But the reason I'm not really waiting for a 15-minute change of character here, and then I'm not really prioritizing the 15-minute change of character here over the 1-minute change of character, is because, and I'm technically considering this 4-hour region as a 15-minute region, is because we are on a really insanely nice bearish pressure, which broke below this 4-hour extremely valuable demand. And we just have a really nice amount of liquidity, 15-minute liquidity below this supply region. So if it's getting mitigated and this liquidity is getting swept into this region, then likely we will just melt down immediately. And likely if we will melt down immediately and we will create a 15-minute change of character, we will have no chance to look for an entry opportunity here because it will just simply melt down and won't come up to 15-minute supply areas. So that's what I'm expecting here. And the thing that I'm looking for here is a nice 1-minute confirmation with high criteria, nice 1-minute confirmation that can happen inside of the 50% of this area. So yeah, technically, you don't have to necessarily wait for a 15-minute change of character here if you are a riskier type of trader. If you have a high risk tolerance currently, then you can try a 1-minute change of character here instead of the 15-minute change of character. And the simple reason is, once again, is because this is the less recent supply. Technically, this is not even a swing supply. This is a 4-hour less recent supply that created the less recent leg. For example, if price will levitate back up to this supply, then I will wait for a 15-minute change of character, obviously here, or obviously I will wait for it for somewhere around here or somewhere around here. But on this less recent supply that is so strong that flipped the 4-hour valuable demand and has huge amount of 15-minute liquidity below it, I would rather treat this as a 15-minute area, and I would rather wait for a 1-minute change of character here. I'm talking personally about my personal risk tolerance. So if your risk tolerance isn't high and you're more like a confirmation type of trader, then confirm this trade with a 15-minute change of character. You have still nothing to lose. If you give it a shot and you take a stop loss here, you give it a shot after a 1-minute change of character and you take a stop loss here, you have nothing to lose. I mean, you have basically, you have to lose 0.5% or 1% here. But if your risk tolerance is high and you are already in a good amount of profit in this month, then you have technically nothing to lose, because I would rather risk this trade with a 1-minute change of character and with a really aggressive risk entry there than missing out from this huge movement to the downside, which will likely generate us 1-50, 1-60 risk ratio all the way down to this demand. Because if you enter here, for example, a 2.5 pip stop loss, I usually use 2.5 pip. This will be like 63 risk ratio. So yeah, I would rather give it a shot, because if price confirms this area, then we will melt down all the way down to this demand. That's for sure. I mean, that's 100%. Just like I forecasted everything here, this is for sure. And yeah, it's your own choice. If your risk tolerance is high, once again, take a risk entry. Take a 1-minute confirmation risk entry here. Really aggressive entry. But we will see if it was worth the risk. I'm ready to take 1% loss there or 0.5% loss there based on my risk amount. But yeah, I mean, a good amount of profit in this month so far. So I have nothing to lose there. I have nothing to lose, but everything to win there. I'm ready to take that loss if it happens there, and I'm ready to take that win if it happens there. So yeah, make your own choices. I'm just showing you what is possible here. All right. So that's about the 15-minute and 5-minute technically also. Yeah, waiting for just these scenarios, nothing else. Switching to the GU. Here we are on the GU. GU is exactly the same. And the reason that I'm really expecting that the EU will melt, because GU and the EU are correlated. We can find a really nice amount of liquidity here on GU, which is leading down to this demand, and it's almost the same distance away as EU from this demand. If I take a look at this, this is actually 140 pips, 140 pips. So it's exactly the same distance away. I mean, GU is exactly the same distance away from this demand as EU is away from that demand. So yeah, these are really correlated, and this has a really high chance to happen. I mean, really high chance to happen. And EU is doing the same. It flipped the same demand area, which was a really valuable demand, flipped it, continuing all the way down, reacting on supplies over and over again. Here was a last break of structure, just broke below the structural low, reacting on this 4-hour supply on the 50%, and currently it's confirming that 4-hour supply. So we will have a really nice entry opportunity on GU2 today, or on this week. And you can see this huge fucking liquid trend line built up for this demand, and there's still volume gap, still inefficiency gap can be found here. So every confluence is leading down to this demand mitigation. So yeah, 50-minute chart. Reaction has happened here on G on that 4-hour zone, 50% mitigation. And technically, last high point, last high point, then it created technically the break of this high point with this break. So it was a body break above. I will count this as the low point that initiated the break of this high point. So this is the technically the character changing point and not this one. I will consider this as the change of character point, not this one. But this could have been to the change of character point, because if you consider this change of character point, you will see that price reacted on this area that initiated the change of character. And yeah, it led down to technically the strong change of character that has happened here. So yeah, that's what has happened on GU. And here was the area that was leading down to the strong change of character, and price reacted on this region, right? So it was a perfect mitigation reaction. One scary thing about GU is that this is a huge liquidity trend line currently. This is just a huge liquidity trend line, and it has a chance to be swapped out to mitigate this valuable zone here, which technically this liquidity has been built up for this area. So yeah, this is one scary thing about GU, but until it follows the structure and follows the order flow, we have a chance to continue all the way down to the demand, and this liquidity might be here for a reason. After the demand mitigation, it will be taken out and it will fuel the longs after the demand mitigation. So this could be the fuel for the longs after this 4-hour demand will be mitigated, and there's a chance that price will just simply continue this order flow all the way down to this 4-hour demand. So all we have to do is to react on what we see. So the thing I will do here is to look for some short opportunities. So technically we are reacting on this 15-minute area currently. After this 15-minute zone mitigation, price has already changed the character here, and technically left the character changing zone behind here, which was a lunchtime area. No, technically it wasn't the lunchtime area, but was inside, outside of the London session. And here is the supply. That is also not a lunchtime area, but we have liquidity below it currently. So yeah, if the session opens and this zone is not getting mitigated, then it could be a good entry POI. Once again, if your risk tolerance is high, this could be a good entry POI to try a risk entry on when New York opens, if it's still getting left unmitigated, and for example, more liquidity is getting created for it. But you just have to notice that it's a bit riskier trade, because we have liquidity, shit tons of liquidity resting above this area, right? So there's shit tons of liquidity, 1-minute liquidity here. So a sweep can happen to the upside and sweep out all of this liquidity before we reverse to the downside. So the thing I would recommend you here is to once again confirm this area if you are not really secure about this zone. And if your risk tolerance is high, then you can try a risk entry here, because this liquidity doesn't have to be swapped out necessarily. And if you take a loss on here after taking a risk entry, you just can try again. You can try again after the sweep is getting happen. So yeah, but it's more safer to wait for a confirmation there and to confirm that area once again, because yeah, higher time frame liquidity can be found here, lower time frame liquidity can be found there. So yeah, basically it's safer to wait for a confirmation, but if your risk tolerance is pretty much fucking high, then go for a risk entry there, because you have nothing to lose there if you have a high risk tolerance and nice amount of profit booked already in this month. So yeah, basically that's what I'm seeing on GBP and EU, waiting for the continuation of the bearish order flow still all the way down to the demand, both of the demands on both of the pairs. Simple, clean. That's what we're looking for. I will update you guys. Take care.